Okay, guys, welcome to Module 8 of the Price Ladder course, where we're going to be going through price ladder data point trading. So this is specifically looking for certain economic news events that come out in the market and that potentially cause the market to shift value from one area to another. Now, what's interesting and what I find very intriguing is the fact that you'll find very few people in the market that are actually willing to trade data points. In fact, they actually consciously stay away from trading them. And if you speak to these sort of people, the large majority of the traders in the market are under the impression that trading data points or um, buying and selling figures is a chumps game. It's something that idiots do. You can sit in front of a screen like a monkey, wait for the figure to come out and just buy it or sell it. Now, I really would like to challenge any and all of you that are in that camp to just explain to me how it's possible for seasoned traders that have been in the industry, at few techs and other prop firms, to be making consistent money on these data points day in and day out. The reason being behind this is because we prepare for them. The number one aspect that we do is prepare. We don't just look at the number and trade straight off of it. We put hours of thinking about big events, big risk events. So what we're going to try and do in this module is build a framework for actually preparing for them. The price action is going to come at the end where we actually look at specific examples, but the large chunk of this module is actually going to be going through the framework with which we use to prepare for these data points, because the preparation for these data points is the most important aspect. If you can prepare correctly and you've got the right scenarios, you can trade any figure and make money or avoid losing money. So what we're going to first cover now is the first thing, and obviously let me just highlight what we're doing, how to prepare for data points. Like I said, these data points are all economic type figures. So, you know, figures on employment, figures on inflation, PMIs, Purchasing Managers Index, all sorts of different economic figures. This is what we're trying to delve into. Now, the first aspect that we're going to talk about now is, and this is a very important part, is that we need to look at the historical performance of the figure. In other words, we need to understand what it's done in the past and what it could potentially do now. So the questions we're going to be asking is, or the questions we're going to be asking are, is there a trend in the data? So for example, if we're looking at inflation, is inflation steadily moving higher? Is employment steadily moving higher? Have the purchasing managers indices been moving higher? Or are they moving lower? Is there a steady trend? If so, well, what figure would mean that that trend is now changed? Maybe we're seeing a change in the trend. If we're trending higher, if we're looking at it, let's say just a very simple histogram with our data point. So just draw that in gray there. So if we draw a very simple histogram here, and then we've got our histogram. So these are our data points. Now, at what point do we say, okay, wait, there's a change in the trend? What if we get a figure that comes out like this? Well, obviously, this was our trend in the data. We've seen an increase steady increase and then this sudden drop. This is where we're going to start asking questions. This is where we're going to say, okay, wait, if this kind of figure comes out, potentially we might see a big move in the market. So understanding, is there a trend in the data, is one of the important aspects. Um, then obviously we want to look um, in that same respect. What is the range? What is the typical range? So let's just say this was quite range-bound data. So if we had, again, like that, and we had something like this, where we could see a histogram, except they're lines, for example. Something like this wouldn't usually be this volatile. But you can see, more or less, our range is between this area and the top area. And in doing so, we can start saying, okay, what is our biggest figure over the last few years? If we know that, if we can just say that this is 2013, 2014 is 2015, over those months, obviously it's not accurate at all, but you get the picture. The biggest figure that we've seen was this, and if this was, let's say, 105, we know that any figure above 105 is the biggest in 2 years. Very simple analysis. I mean, it doesn't take a rocket scientist to do this, but if you just take literally 5 minutes to look this up, it could mean all the difference in your trading strategy. If we know the biggest figure in the last 2 years or 5 years or 10 years, a huge figure that comes out might just change the dynamics of the price action. What's the smallest figure in here? That's our lowest figure. We know that that figure was 45. Anything that comes below 45, then we're keeping our eyes open. It's these just small little observations in the market that can make all the difference to your trading when you're trading data points. Okay, this is all for now. In the next one, we're going to look at how to determine the importance of news and the effect on the market. Thank you for listening.